Hello everyone, this is Marshall Giller bringing you the morning comment for August 12th. The market's quickly gotten over whatever shocks it felt due to the recent increase in geopolitical tensions, and a risk-on mode pervades. Although one difference between now and previous risk-on periods is that the correlation among assets seems to be much less than it was previously, when then every asset was either a risk-on asset or a risk-off asset. Most European stock markets were up over 1% yesterday, even though things are really just going from bad to worse in Ukraine as far as I can tell. Nonetheless, dollar-ruble trended lower for most of the day, which demonstrates how the market's ignoring developments in the Ukraine. While the risk-on mood weakened the dollar on Friday as the need for safe haven assets diminished, that wasn't the case on Monday. The U.S. currency was generally higher against its G10 counterparts. It was mixed against the EM currencies, as some of the more beat-up ones that we identified yesterday, such as the Brazilian real and Mexican peso, rebounded. Now, the New Zealand dollar was the worst performing G10 currency overnight, as house prices and house sales fell by more than expected. And as European trading starts today, it's showing no signs of recovering. Meanwhile, the Norwegian krone and Canadian dollar, the two best performing currencies over the last 24 hours, have been losing some of their gains in Asian trading this morning. They may be ripe for profit-taking if you're looking for something to sell today. Eurodollar trended lower yesterday despite the higher European stocks. It may be that less money is flowing into European stock markets from abroad nowadays in light of the Ukraine crisis. That would confirm what ECB President Draghi said about a decline in short-term capital flows being one of the negative factors for the euro. I remain bearish on Eurodollar. As for today's calendar, the main point of interest in Europe will be the German ZEW survey for August. The current situation index and the expectations index are both expected to have fallen. This adds to the recent signs of a slowdown in the Eurozone recovery, and more specifically to the bloc's strongest economy. The report may well add to the downward pressure on Eurodollar. In the U.S., the NFIB Small Business Optimism Survey for July is forecast to reach its highest level since October 2007. This indicator is important because most of U.S. employment is in small businesses. On a similar note, the Job Opening and Labor Survey, the JOLTS report for June, is also due out. There, however, the forecast is for the number of job openings to fall slightly from May. That would be just normal after 2 months of strong gains. While this indicator isn't particularly market affecting, it is gaining more attention nowadays because of the Fed's emphasis on the job situation. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, Head of Global FX Strategy at IronFX Global, wishing you solid trading.